Hello, it is Monday the 21st of April 2008, and this is Brian Shannon from alphatrends.net. The S&P 500 closed today with a gain of 31 cents, or about a quarter percent, as the big gains from last week are being held on to, and actually, again, we saw a slight gain here today. The biggest reason that I think that we got to take it a little bit slow in here is, first of all, this week we have over 600 companies reporting earnings. And we've got this market just below the 140 level that's been so important as far as resistance here over the last several months. It doesn't mean the market can't break out past there. Just because it was resistance before doesn't mean it will be again. It's only potential resistance at this point. But it means that we want to just go slow here and be ready to exit if the market starts pulling back, or re-up your long positions if the market can push on through and continue to move higher. On the 10-minute time frame, you can see here that we did see a little bit further profit taking early on, but buyers did come back in, and this was had a little bit of trouble in the afternoon with the closing area from Friday, but then late in the day the buyers came back in and pushed the market back up above the daily VWAP and closed right near the highs here. So the market action continues to be very constructive in here. We'd seen the break of this trend line. That trend line was tested as live angle support in there, and last week we saw the earnings reports that motivated the buyers to come out in full force, and shorts get squeezed. You can see that the volume was light in here today, but again, the only thing that pays is price. Volume is a reason to be concerned that possibly the market is going to pull back, but right now, price-wise, we see that the market is holding up very well in here. The most important level of potential support for this market over the next week or so is going to be about that 137 level. Breaking below 137, you might want to get a little bit more defensive, as that was previous level of resistance that we had broken past last week. Again, on the Google earnings was the catalyst that got the market up beyond that. Now, again, we're extended short term, but today we're starting to begin the consolidation of those gains and the digestion of them. The correction of a large, sharp move like this can occur one of two ways. It can pull back price-wise, and we could get a general idea of where the market has the potential to go by looking at Fibonacci levels. That this level here would be a 38% retracement, 50% retracement, 61.8, or the market can correct more sideways through time. The more bullish scenario is a sideways correction through time, as it shows there's an underlying bid to the market, and that the low volume just means there's an absence of sellers. And if the buyers get motivated once again, then we could see the market shoot right past that 140 level, and then we could potentially put into play these other levels of potential resistance up near the 200-day moving average and the lows from back here in mid-December at about 144. So a lot of reasons to look at this market as being constructive, but again, and we've got this inverted head and shoulders pattern that I pointed out. But the biggest reason for concern is that this weekly time frame is still showing a lot of troubling signs in there. So it just remains a reason to be overall suspicious, but as long as this bullish action continues, forget about volume and that sort of thing. As long as what you're trading is moving higher, just be quicker to exit if at the first signs of weakness when there's light volume. But only price pays, and that's what you have to pay the most attention to in your analysis. The Russell 2000 was up a penny today. Again, the major level for this market to move past. And really, what would be very significant for it would be a move past the $73 level. That's the level on the weekly time frame where we'd seen really, the confirmation of this, bearish activity. We'd seen the lower high and then this lower low that occurred right at that $73 level. So breaking back above there would be a bullish event that might put this 200-day moving average into play. Might put this, this trend line is actually going to come into play before that. Let's take a look at it on the weekly time frame just to get a little bit further perspective. So you can see we're right on that trend line. So we're at a critical juncture as far as that trend line goes, and just below this longer term level of prior support that did become resistance. So reasons still to be concerned in here, just but when you break it down, to the shorter term time frames, the market is coming down to the levels that we were looking for. First, we're on that 71.25 level for potential support, so that's good to see. We've got a rising 5-day moving average. If the market breaks below the 71.25, I think that's where you want to get a little bit more defensive. You know, breaking past these highs will confirm the recent strength, and really it's, you know, still just a real nice pattern of higher highs and higher lows in here. No reason to be concerned yet in here. You know, it is extended. The volume is tailing off a little bit, so those are just reasons to think, well, you know, you want to keep your guard up more than anything. But this 71.20 actually is the level that if it breaks below there, then maybe we get a little bit deeper pullback. But for now, there's nothing to suggest that. This daily chart is shaping up much more bullish. It's the weekly that remains troublesome. But I mean, even if we see a resumption of this longer-term downtrend on the weekly time frame, it doesn't mean you know, these aren't great rallies to participate in on the long side. And you want to obviously be participating in these trends that you know, occur, you know, 2 to 5 days or so. That's where the real trading moves occur in this market, and you know, that's where we can identify them through the use of multiple time frames, like we look at here. The the financials rather. Again, this market needs to really get above and hold above this $26 to $26.20 level, and more particular above 26.20. If it can hold above there, and then we can see that, you know, this 24.40 level, we had seen support in there. That looks like a higher low based on, you know, the Bear Stearns low right here. Then we have these higher lows. Now, if the market can break past 27.25, break this downtrend line, then perhaps, and that's not the best defined trend line in here. We could look at it like this. But getting back above that trend line and then above this $27 level and 27.40, then maybe this market begins to rally a little bit. But for now, the financials remain a big mess, and there's really no reason to be trading them on the long side, I don't think. Especially when they start, you know, when they break down and are unable to recover like we saw in here today. I think getting back above the 26.30 area, then maybe it's going to set up another test of that 27 area, and then you know, we'll take it from there. I don't see that there's really any reason to get excited about these things right now, though. The NASDAQ 100 was up 33 cents. This group was the strongest today, up 0.71%. Apple had a big day. You know, Baidu I saw, and a couple other. You know, there's a lot of good trading stocks out there. I had mentioned this morning that Feed looked good. This had a real nice day. Imclone's got a huge short position, and this stock is breaking out now to multi-year highs, and those shorts are in big trouble. So continue to keep your eyes on stocks like Imclone here as it breaks past multiple year highs. When you look at a stock at a 3-year high, and you look at I think it was 7 million shares short or so, you know, it's not likely that many of those shorts are making money, and that provides further fuel for the upside. Back to the NASDAQ, though. NASDAQ, again, you know, last week it broke definitively above this 46 level. Also took out that 46.40 area. It remained above there. Today added to these gains. The buying interest maybe trailed off a little bit as volume diminished, and we've got to, you know, keep that in mind as just a potential reason to be concerned, just a reason to keep your guard up. It doesn't mean sell or sell short, because again, only price pays, and when prices are moving higher, I don't care if I make $10,000 on light volume or if I make it on heavy volume. It's all going to spend the same. It just means be more defensive. You know, we've got this trend line up here at about 46, you know, 47.80 or so. Potentially, we could find sellers there. We could also potentially find sellers at this prior level of support near about 48.5. Where, you know, it's closer to actually 49, and then we've got the 200-day moving average as well. But when we look at the 10-minute time frame, it clearly remains very bullish in here. We saw that. I mean, you could even look at this. Let's look at a 2-minute time frame. You could look at this as a cup and handle that developed in here, and when it took out those highs from Friday and completed the you know, the top of that saucer, that's where the buyers came back in and really established their dominance in here today. So these patterns that you see on daily time frames, you can find them on a 1 minute and 2 minute time frame. It's all the same. And what it shows is a level of resistance here where we have sellers, buyers becoming more aggressive price-wise as they make higher lows, and buyers being more aggressive time-wise as it takes less time in between these tests of that resistance, which makes the inevitable breakout more likely. So the market remains in a very solid uptrend here near term. Volume trailing off leaves us reason for concern. So, you know, if we get it back below 46.50, you know, get a little bit more defensive, take some profits, and wait for a better entry point.